Welcome back to the last part of the virtual day. The next discussion will look at the topic institutional adoption of regulated digital assets, blockchain and ESG. I'm honored to welcome Sheila Warren and Michael Sang, who will deep dive in this topic and let us be part of their insights together with Zenobia Gottschalk. So dear Zenobia, please take over.
Hello, thank you, Nicolo. Hello, everyone out there. It's great to meet everyone. My name is Zenobia Gottschalk. I am the SVP of Communications here at Hedera Hashgraph, and I am delighted to be moderating this today. Sheila, I'm going to go ahead and jump in because we don't have too much time. Your work at the World Economic Forum, we are focusing a lot today on sustainability and the impact of crypto. Can you jump right in and share with us? I know we've discussed some really tangible things that you guys are doing there.
Yeah, thanks, Zenobia, and thanks so much for having me here today. It's a pleasure to be here. We, over the course of time, have really observed how crypto can have social impact and how there's a huge conversation happening, which is no surprise to anyone, around sustainability. And so part of the work that we are embarking upon here at the forum is something we're calling the Crypto Impact and Sustainability Accelerator, or CISA, which is really focused on creating a coherent and constructive narrative across the crypto ecosystem that really demonstrates in tangible terms what are use cases. How do we actually demonstrate and prove that crypto is having positive social impact? And how do we also create metrics around sustainability that are going to be relevant to the crypto environment?
Great. And Michael, we've chatted a little bit about institutional adoption. Where do you think that we are today in the curve, and what are some of the challenges that you see in terms of more institutional adoption of crypto?
Oh, well, I think 2021 has been a very pivotal year for institutional adoption. It's almost a perfect storm, right? We finally have technology maturing to the point where we can support full commercialized, scaled, use cases. We got regulation around the world in key areas in Switzerland and Singapore, Hong Kong, Germany, all these places where now with those very clear rules on digital assets, we have the ability to actually, get institutional adoption from Wall Street and from other places in the world. And so I feel that, we are at that sort of inflection point, right? When 86% of central banks now are actively researching their own digital currency strategies. And on the private side, the stable coins has now become a $100 billion market. There's a lot of very interesting statistics, right? UN says that 10% of global GDP will be on blockchain in 5 years, and there will be 24 trillion US dollars of digital assets by 2027. So I see this year as a very, very pivotal year when that inflection point happens. The challenges, I think, are really in terms of interoperability, right? Because if all these central banks, for example, they're on different blockchain systems, and now you want to allow clearing and settlement and transfers across different ecosystems. Technology interoperability is one issue, and the other is really regulatory interoperability, right? If you're doing sort of a cross-border transaction and the European rules are different from the Singaporean rules, then how to do things in a compliant way, coming at a time when these rules are at best very vague, things like FATF and the travel rule, things are just getting set. So I think the next few years, as real institutional adoption from central banks and from institutions happen, and these things getting set, this will be basically the huge opportunity, the huge wave of digitalization where assets are now going to be securitized by institutions on a mass scale.
Thanks, Michael. And Sheila, we were already starting to see institutions have a greater focus on ESG, not just for cryptocurrencies, but across the board in all of their investments. How are you guys at WEF thinking about, more holistically, what does the market need there? What are investors asking for? What do you think makes up something that's a bit more comprehensive?
Well, I think we have seen, completely outside of crypto, to your point, a lot of focus on ESG ESG metrics now as a decision-making factor. In some cases, a really critical criterion for assessing whether or not an investment is going to pass muster with a particular institutional investor. And so, you had BlackRock, you had work from out of the forum, out of our International Business Council, really focused on landing ESG metrics that were going to allow comparisons that were meaningful, where you weren't comparing, apples to zucchini. You were really comparing things that made sense to each other and deciding what was more in line with your stated values, whatever they might be. And I think there's some variance in those, which is important to acknowledge. However, a lot of the existing ESG metrics, they don't really port very well, if at all, to a decentralized environment or to the crypto ecosystem. So there's a question now beyond kind of, green mining or greener mining, how do we think about assessing, what are appropriate metrics, and how do we, I think more to the point, measure that we're making progress? Because I think right now, a lot of the conversation is about, let's compare, proof of work mining, for example, to, I don't know, the economy of a country and name your country. And I don't find it to be a very useful or productive comparison or point of focus. I think instead we should be saying, how over time do we demonstrate that we are moving towards, hopefully rapidly towards, more sustainability within these systems? And how do we ensure that investments are going to be targeted to those who are committed to that kind of transition and who are actually putting into place real actionable approaches and processes that are going to lead to a better world in terms of sustainability. Separately, I think that we are not focusing enough in the crypto ecosystem. We're looking a lot at the E part of ESG, a lot less at the S part of ESG, which of course I think is extremely compelling, particularly in emerging economies where you're seeing real in production use cases where people's lives are really changing and being bettered by the advent of a crypto ecosystem in their particular jurisdiction. But I think all of this in our environment really stems from the governance opportunities, that G portion, which oftentimes is kind of thrown out and given short shrift. But I think that the governance, transparency, and other kinds of things enable us to create really robust measurement in this space in a way that I think needs to be done across the entire ecosystem with consistency, as opposed to defaulting into our factions, which can be interesting conversation to say the least.
Right. It's going to take a village.
Yeah.
And Michael, we've talked a little bit about sort of environmental impact. You had mentioned to me a concept that I had not heard before, and I think is really interesting. And this is the idea of cross-border digital green bonds. Can you share a bit about how those work and how you're seeing that potentially evolve?
Yeah, I think this is a huge megatrend. I sit at my fintech research center looking at how we're going to do sort of institutional adoption of digital assets, right? The asset-backed securitization, this kind of thing. I've looked across all sorts of things like real estate and commodities and fine art and everything like that. I really do believe that the big ticket item that's going to really drive institutional adoption will be green bonds, right? Sheila's been talking about it a lot. It's green bonds, traditional green bonds, right, which is debt instruments from corporates or sovereigns to invest into sustainability, right? The green part is really just that use of funds for traditional debt instrument has to be follow these green bond principles. There's a couple international standards toward sustainable use cases, and that is a $350 billion market. And I think post-COVID, basically the financial institutions are really signing on board, right? We have 130 financial institutions signing a pact for sustainability from the UN environmental program, dedicating something like $47 trillion AUM between all of them. That's 1/3 of the financial sector into this space. So there's a lot of money that wants to go into this, and from BlackRock, JP Morgan, these big guys. But a lot of it is locked there because of compliance, i.e., if you cannot prove the use of funds, right, or the tracking and tracing ESG requirements, then you can't invest, you can't unlock this multi-trillion-dollar tap, right? It just so happens that the thing to solve that is blockchain technology, right? So you get the track and trace of the use of funds and the ESG requirements and reporting and all that, which is very onerous and difficult these days, can be very efficiently done by blockchain. And I think, if you look at the other side of the equation, who's going to deploy the multi-trillion dollars of bonds? I think China becomes a very nice target for that, because Xi Jinping wants to be carbon neutral by 2060. That's going to require $15 trillion dollars of funding, of which China itself can't invest, coming at a time where there's an interest in opening up the capital markets. And so, there's going to be a huge opportunity for, again, these cross-border bonds where there'll be Chinese issuing companies, right, but denominated in dollars or euros for distribution internationally. And it's also a macro effect, because if you look at bond yields in Europe or Japan or a lot of places overseas, they're zero or near negative, whereas the same credit risk bonds in China are yielding like 3%. So already there's a macro sort of trend to get hundreds of billions of dollars of hot money around the world that wants to go toward China, now invest in sustainability. And it also helps, of course, that China's really leading the world in terms of blockchain institutional adoption use cases. So I fully believe that China is really going to drive the world in terms of institutional adoption of digital assets. It doesn't look that way because recent announcement by Liu He with kind of clamping down on Bitcoin mining and that kind of stuff. But be very clear, that's unregulated crypto, right? Whereas the regulated version of things, digital assets, I think is heavily supported and experimented upon. And within a few years, when the use cases get set, you're going to see China flip a switch and really digitize the world again.
I just want to chime in on that. And I think that is such an important point. It's getting lost in a lot of the media, frankly, disappointingly, around this topic is around what happened around Bitcoin mining, of course, and this kind of like China's kicking out all the miners and whatnot, but it misses the broader trend of what is happening there. And to Michael's point, regulated digital assets are really, it's a huge market, it's a huge opportunity, and it's something that we should be paying a lot more attention to from other parts of the world, both as a model to some extent, but also because it's going to have a profound impact on the uptake of those kinds of opportunities in other jurisdictions as well.
And, for both of you, what do you see coming out of the rest of Asia as well? And then, more broadly, as you think about other countries, besides sort of the what we think of as traditional sort of first world, how do you view sort of the landscape in terms of the rest of Asia and then also rest of world as we start to transition to this, adoption of digital assets?
Well, I'm going to defer to the rest of Asia to Michael and let you start with that, and then I can speak quite a bit about LATAM and Africa and some of the emerging economies. But Michael, why don't we have you start with Asia from where you sit in Shanghai?
Sure. I really believe that a lot of the innovation and institutional adoption is going to come from Asia. If you look at Singapore, for example, I really believe that Singapore is really going to take a world leadership role in the institutional adoption of digital assets. They have a very, I would say, enlightened government, which is treading that nice balance of regulation, but not over-regulating, and having the proper sandboxes to spur innovation, that kind of thing. The Singapore government has really established a nice regulatory and a business environment framework. So really, there's a wholesale adoption of companies setting up shop, whether they're digital asset companies or exchanges or other types of companies to support that ecosystem, right? And if you look at MAS, they came out of phase 5 of Project Ubin, doing all sorts of testing on different use cases of digital assets and interoperability. We have Temasek working with JP Morgan and DBS Bank to look at wholesale settlement of digital currencies and things like that. The other major hotbed is probably Hong Kong. Hong Kong Monetary Authority has been doing a lot of also wholesale, what we call MCBDC or multiple CBDC interoperability, now linked to Bank of Thailand, recently the UAE, and then very recently, just in the last month or so, the People's Bank of China, which is very interesting because China is about to issue their own digital RMB, or what we call ECNY, sometime before or during the Winter Olympics in 2022. So we're seeing a lot of activity coming out of the Asia region, and I think that's going to drive a lot of adoption, especially since ASEAN in general is economically one of the most important economic zones, and also linkages to Africa. And in both these cases, most of the high growth countries are in these two regions, and these are the ones where the countries can leapfrog the traditional say banking ecosystem or credit card ecosystem and go straight to the digital asset or digital currency sort of innovation and really get the benefit from that. So I see that massive adoption is going to be really driven by Asia.
I agree with that completely. I think particularly from an institutional perspective, exactly right. But I also think that Asia, it's not a monolith, right? Obviously. And so I do think that parts of ASEAN demonstrate some of the other use cases beyond institutional adoption that I think are really powerful. And those are reflected, of course, in the Caribbean, in parts of Latin America, and of course, in Africa on the continent, as Michael noted. So I think number one, there is a huge investment corridor between certain countries in Asia, particularly China, Japan, Korea, and Africa, and certain countries in Africa. But there's also just a gigantic market. So when you look at what's happening with fintech in general in Nigeria, Nigeria's been a fintech hotbed for a decade, and now we're really seeing an uptake in adoption of crypto in that entire environment, and of blockchain technology as well. We're seeing the Eastern Caribbean Central Bank, the way that they are connecting a lot of the island nations to think through how they might create one system that is actually using crypto or using CBDC, depending on who you're talking to and what you're looking at. But I think that in addition to institutional adoption, thinking about a lot of the sort of micro lending, microcredit, these kinds of use cases are really powerful. And where you're seeing those have more traction is in emerging economies that, to Michael's point, can actually leapfrog. Maybe the issues are a little more around infrastructure than around consumer base or around user adoption from sort of a cultural mindset. There's a lot of willingness to already do this. To some extent, connectivity and things like this are proving to be the barrier, as opposed to any kind of institutional incumbent resistance, which I do think is a factor that we have to think about in some of the Western economies. So we are really looking closely at, Haiti and Bermuda and the Bahamas, and like a lot of things happening out of there. We're looking at Nigeria, as I mentioned, Ghana, Senegal. There's just lots and lots and lots of things happening. And so when you think of this, when you look globally across what's happening, you're seeing tremendous activity out of Asia in terms of systematic, widespread adoption that is being really led by a central institution, whether it's a central bank or whether it's a set of kind of institutions that are kind of coming together to make that happen. When you look at other environments and other economies, you're kind of seeing more grassroots uptake of the opportunity because it's perceived as being supportive of the way that business actually and commerce are really happening on the ground in some of these places. And that the combination of those two things, especially with the conversions that Michael noted in Africa, due to the amount of money flooding into Africa from Asian investors, I think is just poised to create this really powerful moment where you see, suddenly we kind of realize this has been happening all along, and then it sort of emerges onto the scene in a way that I think is going to be quite revolutionary. So yeah, lots and lots happening all over the world.
And so you have sort of this grassroots adoption, and then you also have different countries, focusing on regulation. And how do you think that the dynamics of those two and how different countries are approaching it will affect, the dynamics of the international monetary system?
Well, I think it's a very interesting point in time in history, right? I mean, this is one of those things where technology can really disrupt and the existing sort of ecosystem, and also blur the boundaries between geographies or business silos or different other ecosystems, right? So if you look at basically BIS is saying that by within 3 years, 1/5 of the world's population will be exposed to the digital currencies of their central banks. And so there's going to be a Cambrian explosion over the next half decade of digital euro, digital dollar, digital RMB, and also on the private stablecoin side. Every little region or every business ecosystem will have their own stablecoin network because the technology has democratized the ability to do so. And then you ask the question, when that happens, how will these ecosystems interact? Well, they won't need to use the traditional banking rails or SWIFT. They won't need to use a reserve currency necessarily, because now the technology allows you to bilaterally settle directly, very efficiently, with no middleman, no cost, no instantaneous, and globally, right? And then the technology also allows you to have liquidity provision, taken from sort of the DeFi world, where smart contracts can now provide liquidity in a very efficient manner. And so that's really game changing. That will clearly have a systemic effect on the international monetary system. My probably opinion is that it'll make the world a much more multipolar international ecosystem, one where large countries and tiny countries like the Bahamas can have an equal seat at the table and be able to take advantage of the ability to do cross-border payments, find FX and liquidity, and being able to exchange value in a much more efficient manner. And that's like really probably the most profound in terms of financial inclusion, right? To really democratize access, not only for countries, but also at the business level, all the way down to SMEs and all the way down to individuals who have been financially excluded because they can't get bank accounts, allow them to, get investment, to do banking services, and importantly, invest into financial products that usually are only given to the elite. This will really transform the world in a positive way, I believe.
Yeah, I agree with all of that. I think that's the vision that we're trying to get towards. And I just want to land that one of the reasons that might not happen is, of course, regulatory and policy approaches. And so I do think that in the guise of, and I think this is actually quite well intentioned, in the guise of consumer protection or trying to protect people who are maybe less sophisticated in these systems, I do have ongoing concerns that will wind up regulating out of existence some of the opportunities to democratize and level the playing field that Michael was just alluding to, that I think we all want to see. It's part of the reason why I'm in the space in the first place. And so I think we have to be very careful, because regulation, there's a lot of regulators in a lot of parts of the world who they have understanding of the ecosystem, but they also feel that their obligation is to ensure that you're not throwing the baby out with the bathwater, and you're not kind of like giving people access to something that's going to like ruin their erode their savings and, ruin their livelihood and all that kind of thing. And I do think that is an important motivation, but my concern is it is really hard to know how to regulate, particularly some of the newer innovations that are happening in this space. And premature regulation, as I call it, remains one of my biggest fears, that we won't realize the world that Michael has described.
All right. Thank you both. Nicolo, I don't know if we have time for any questions from the audience.
I would just ask one question. With regard to cross-border green bonds issued on blockchain, what is your view on BIS Innovation Hub project in Singapore for retail tokenization on the BIS green bonds issued in 2020 and 2021, especially in the light of potential CBDC cross-border issues? Should I?
Yeah.
Is that for Michael, I think?
Yeah.
Okay. Yeah, I'm happy to comment. I think the digitization of any sort of digital security is very profound, because it actually lowers the bar for access, right? Usually for traditional bonds, is institutional access. If you don't have hundreds of thousands of dollars and actually a sort of a license, you can't get access to this. There's a new form of digital green bond, we call a retail green bond, where because of the digitization, you can fractionate the ownership to any sort of arbitrarily small amount. Like in Thailand, for example, they're doing a 1 baht bond, right? So like if you have one tiny amount of money, right, you can actually go and buy fractional ownership of that. That allows, for example, the citizens of that country to participate in the investment in the future development of infrastructure in the country. Is very, very profound. And not only that, but not just the citizens, but to reach a global audience. So if you look at, for example, millennials who are, digitally native, crypto, native, looking into sustainability and this kind of thing, that's going to bring a global audience to any sort of set of debt. And then the second part of that is not just the bond itself can be digitized, but the payment can be digitized, i.e. The interest payments can be set by a smart contract. The settlement of the bond itself can be done in a digital currency itself. So once we have a complete end-to-end digital ecosystem to deliver this, that's very, very profound. Because not to think of other innovations such as the ability to program, these digital currencies potentially. Also, because everything's digitized, the big data opportunities to be able to do more sophisticated things with the understanding of where the capital flows go. It's a brave new world. It should be very exciting to see how this really pans out.
Yeah, can I just add one thing to that, which is
please,
what is so exciting, I think, about these new models is that you can fractionalize the reward via the ownership, but also the risk. You can more effectively allocate the risk where it goes. So the model I was talking about around consumer protection doesn't really make sense in the new environment because you can allocate commensurate and appropriate risk to each individual holder. You don't have to kind of be holding the bag on like the big giant thing, right? And that's something I think is not really well understood in the ecosystem. We kind of talk about, oh, you can put in one bot. I love that example. And you can kind of have that one bot can be held by somebody all around the world. It doesn't necessarily have to be limited only to Thailand. But at the same time, you're only on the hook for that. You don't have to fail the whole, you don't have to like somehow be wiped out if everything, goes down the tubes the way that was kind of more common in the models where you had to put so much, you'd have so much at stake in order to even get involved in the system in the first place.
Good. So thank you very much. As we have heard, we are only at the beginning or in the middle of a development that has the potential to change the whole world or the industries. So we'll certainly focus on this topic again in 2022 to see how the whole industry has developed. So thank you very much for the insights and